Okay, let's take a look at this last week. It was a very interesting week. I expected it to be high in activity. And just a quick note that markets are closed next Friday for Good Friday. And, my opening comment is, asking the question, is the wind at our back now? And we had, at least here in the short term, and we had the PCE was down today, and I'll get to that here in just a second as far as some of the economic numbers. But some of the bank chaos went away. It's been the front of mind for probably the last 2 weeks, and now it's gone away. I guess investors and traders have short memories, and I've always found that to be true. So here in the short term, it feels like we have the wind at our back, and my closing comment will just kind of be an update on my balance beam analogy that I used last week between Peter Schiff, who's expecting things to kind of fall apart immediately, and David Hunter, who ultimately expects things to fall apart, but first having a run up. And so kind of walk through that, looking at some of the charts. But let's take a look at this week. And what do we have here? We have, that's next week. Let's look at this week that just ended. We had the Dallas Manufacturing Index, which, I watch these things because I worked with manufacturers for a number of years. The consensus was that the manufacturing index would be down 10, and it was down 15.7. So if we just take a quick look, it's not been a pretty picture since April of last year. So it's still depressed. We had Wednesday, we had mortgage rates knocked down a little bit. I expect them to probably stay maybe right around here unless something dramatic happens next week. Maybe drop a little bit, maybe up a little bit. And then the pending home sales year over year, which I watch, was down 21.1%, but it's not as bad as it was a few months ago. So, the trend looks better, but it's still not a very good picture. This is a lot interest rate driven, and I think that just because the interest rates dropped a little bit, we're seeing some of those numbers come down. Plus, at the time of the year, I mean, we're getting into the spring, and people, if they're going to move, they're going to move during the spring and summer months for the most part, maybe early fall. And then we had initial jobless claims actually came out higher, and that's the first time really in a while I believe that they've missed it hasn't gone under what the consensus was. So if you're looking for the Fed to pause, which I believe they will at this point, that's still open for debate, but it's this last figure that to me influences that. But that was, something, yeah, okay. 198,000 was up if you're cheering for the Fed to stop raising. And then today, this morning, core PCE, I mean, with the bank things fading in the background, the fact that the PCE, the core PCE, came in at 0.3% when it was predicted to be 0.4%. I don't know what the TE forecast, I guess that's the Trading Economics, the website, was predicting 0.6. Came in at 0.3 and off to the races, and I'll show that to you here in a minute. Now, I did not last week go through and do next week's calendar. So let me just do that real quick. There's not a ton of action on it. We have the ISM manufacturing PMI, which has been running, below 50 is considered to be contracting. The Institute of Supply Management Manufacturing Purchasing Managers Index is what that stands for. So I keep an eye on this to make sure that economic activity isn't clicking up. If you're wanting the Fed to stop, if you're working in manufacturing, you're probably cheering for it to go up. So I apologize for that. Tuesday next week, we have the JOLTS report and the job openings at 10.82 is the last one. The forecast was 10.8, and the actual, we'll see what we get this coming week. We also have the factory orders month over month, and this thing has been running down also. We had this one kind of anomaly here, but I expect that the February's will be down. Also, all these things feeding in to the Fed. And then Thursday, we have initial jobless claims, and then Friday, unemployment rate, non-farm payrolls. So that's what we've got coming up for next week. Now, let's just kind of look at what happened this week. I mean, it was, an incredible week. And if we look at it weekly, I mean, for the week, we were up, almost 100 points, 32,760, almost 1,000 points, excuse me, in the Dow. And then the SPY, same thing. So now all of a sudden, we've recaptured this uptrend that we started back in October, and now are far away. And again, these are weekly data that started back in January of last year, this downtrend, and now we're feeding away from it. Now, obviously, getting above, say, 418 or 420 just seems like a foregone conclusion at this point. I would expect a pullback. I don't know when. I'm actually playing it that we'll get a pullback, a small pullback this week. I'm guessing 400 or so, and then a continuation is what my expectation. But it went up a lot, and if you look, I just want you to realize how crazy this week was. If we look at the daily, we've got 1, 2, 3, 4, 5. So on Monday, we had this up day, then we kind of went down, we recovered, and then up, gap up, gap up again, small gap up, another gap up, small gap up, and the close of today. I mean, just look at the last. I want you to kind of just take a look at the last, from 3 o'clock this afternoon. Here, went up. I mean, these are things you get in a entire week sometimes. But here we ran it up, we ran it back down, and this is in the last 2 hours. Now, look, this is the last 5 minutes of the day. We started down at 408, ran it up $1.50, $1.60, $1.70, and then it backed off a little bit at the end. But post, it's back up a little bit. So, but that's just, this is just, talk about strength of move. That was powerful. Now, I sold on a lot of my positions as this got more in here. I didn't expect that to happen. I thought we'd kind of go back down, that we would get just a pause down here, and then that would be it. But as usual, the last 5-10 minutes of the day is just insane. And so it ran it up from 408 all the way up to 409. 39 is what it closed at. Stands at 409.54 in after hours. But just a crazy day. And the Qs that don't have the banks. Now the bank thing kind of went away, so that's why I think SPY was kind of unleashed. One of the reasons SPY was unleashed today. And the Qs, which is NASDAQ, mostly NASDAQ stocks, we're in this uptrend. We're at the top of it. And again, I'm expecting some type of a pullback, whether it goes all the way back down here to the bottom of this to 303. It might be a stretch with so much momentum going up now, but that could be the expectation of this particular trend. And we also take a look at the U.S. 10-year for the week. It was below, and if we look at the daily, we got down here, and I thought, oh, we finally get a close, and then we got to pop back up, and so it didn't stay there from last week, and so we didn't close there. I was hoping we'd close below 3.4, but with this big run up, it's kind of still in this downtrend here. And that should be good for stocks if it continues going down, which would be the expectation. But, on the weekly, you can tell we've got this inverted hammer here that basically says that, things are going to get, the push back. I mean, we had the interest rates pushing up here, and by the end, we spent most of our time down in here. Started here, ended here. Ended here, excuse me, at 3.47. Now, I was hoping it would close below 3.4%. So that's kind of the markets. So we'll take a look at the dollar real quick. The dollar, again, still continues its downtrend. My next level that I had laid out is 102. 0.4-ish, and then 101, and then I think after that you can start to get some collapse here, especially below 101.3-ish, or 101 if you want to just use round numbers. And then crude made a little bit of a comeback, but my expectation still, now granted, it might run back up here. I don't follow crude as much. I have been studying it. But, this may run up into the 80s and then back down. The VIX has been getting knocked down. We're back in, low. We look at the daily here, 1, 2, 3, 4, 5 every day. It was lower. And so these are the wins. The wind is at our back on a lot of these things. And the put-call ratios, although today, and I placed a bunch of puts for next week, just expecting that we'll get a little bit of a pullback before we rise. Now, I could be wrong. I mean, there's a lot of momentum behind it, but we've had 3 gap ups going back to SPY. 1, 2, 3. I mean, we've had 3 pretty huge jumps. I think it's time that it'll take a rest, but it doesn't have to, just because I'm expecting it to, doesn't. I have some longer plays still in play with SPY and the Qs for the most part. So that is kind of what happened in the markets this week. Take a look at sentiment. I talked last week about deflation, and the two things that are going to have to happen are the sentiment, and it's more, to me, not necessarily the investor sentiment, but it's the consumer sentiment, which I'm watching to see if that starts to weaken, and I think we're starting to see it today. We did get a reading. Let me go back to that real quick because I don't think I covered it. let's hear this week on Friday. Yeah, consumer sentiment was down to 62. Now this thing has been defying gravity for some time, and I thought this thing would really start to run down, but it's run up for the most part. But I think the consumer is getting pretty beaten up by things like credit card rates and unemployment, initial jobless claims, things of that sort. So this very easily can run down some more. But so I'm keeping an eye on this. This starts to get really, really ugly. Then let's just see here. Go back 10 years. Let's go back 25. Yeah, we're still pretty low comparatively, but we're not as low as we were. I mean, that's it can get worse, and my expectation is that it will, and this would feed into David Hunter's deflationary bust. Between that and the rising rates and this, the sentiment, consumer sentiment, those would drive a lot of what's going on with regards to deflation. Investor sentiment was 45.6% bearish, but that's an improvement. It's still in where I'm happiest, where people are still really fearful, and I'm greedy. Greedy is kind of a counterintuitive notion, but we did have some more people move into being bullish, and some more people moving into neutral from bearish. So this is starting to move in the direction where you're going to start to see more people pile in. And then the fear and greed index, I'm going to see what it wound up ending today. Paint it. Neutral at 49. A week ago we were at 37. The week before we were at 33. So this thing is on the mend. We have a pullback. We might go back into fear next week. That would be my expectation. And then my final comment is really this whole thing between, and let's just pull up some of these, probably the two big ones. The Dow Jones, David Hunter, who's gotten a lot of flack for his predictions and saying we're going to have this huge run up. Sometimes I was wondering how that would ever happen. Just kind of, especially looking at the SPY, especially when we were down in a year. But he stood by his guns and held on to them, and basically now we fought our way back up to maybe this guy's right. And so we've run where we were on the verge of, I was thinking we get below this 368 number here, that would, now I think we would have been headed down lower. And actually I think my number was 380. And I think David Hunter had a number of, say, 368. This particular last 2 weeks has really changed the whole outlook of everything. We recover this, say, next week, and this becomes support here, then I think we're running it up. And his prediction for the SPY, bring it up here. I know he does the S&P, but the equivalent, basically the equivalent, would be 600. So we're standing at about 409. This thing can go down, and let's say to 400 this next week. Might not get there. Might continue to just pop on up. Not making any trading calls. The Dow Jones Industrial Average now stands at 33,274, which was the first time about where it stood. I think it was 33.5 when I first started hearing David Hunter's prediction. And the expectation here is 45,000 is what he's looking for on that. So that still has, roughly, not quite 50%, 45% or so to go. And so I'm, from that standpoint, he is. It's in the realm. I mean, there's still a lot to prove. There's still a lot of headwinds. I mean, all it would really take to knock things off is another bank or two failure, and then there's another couple weeks gone. But I do believe the clock's ticking at this point, because there's just all of these things are starting to fall apart that we looked at. Consumer sentiment, we're looking at manufacturing. Now we're finally starting to see the unemployment numbers go up. So there's a combination of things that are happening here that, before it gets so bad that we're in a recession, and then, organizational company reports, their earnings reports start getting really bad, and that will help fuel the fire for things to go down. Now, there's definitely a window here for David Hunter's piece to happen, and there's just so many pitfalls that could potentially get in the way. But I am amazed at this point that how much it's stood the test of time, regardless of the timing of it. I think he expected it to happen last year. And as he would say, David Hunter would say that it didn't happen because of the Russian invasion of Ukraine, kind of put everything on hold. And now here we are. And even despite all that, it's still fought its way back up from the depths. So he does expect, once these things run up, that an 80% drop, which is pretty much in line with what Peter Schiff has been saying for a decade. So if David Hunter is early, then Peter Schiff is way early. I mean, he started talking about this back in 2005 or so in his books. My expectation again is I'm on the balance beam. I'm liking what I'm seeing as far as the markets go. It seems to be reacting to things that I'm sometimes surprised about, and the moves are incredible. So this could be the blow off top that David Hunter and then melt up, because he's even here, I believe he said a number of times that even at 45,000 that it could go higher, and even with the SPY at the S&P going to 6,000, it could go higher. And those are the ones I primarily, and most people I think, are primarily interested in. So we'll see. We'll let this play out, and there's pitfalls. It just feels like I don't know, Aladdin in the first Aladdin animated movie, where he's running, goes to get the lamp, and Abu's over there, the monkey is over there trying to get a ruby, and there's lava and chaos everywhere around him once they violate the rules of entering the Cave of Wonders, which is don't steal anything. And Abu picks this giant ruby, and then, like I said, chaos starts in, and off they go. And I just feel like any of these lava rocks or lava sloshing around can throw this thing off, one way or another very quickly. But again, I'm not the one making the forecast. I'm just reporting on it and what I'm seeing. And so I think, unfortunately, we do end in a bad spot. I mean, both the most contrarian people I know are David Hunter and Peter Schiff. So you want to listen to other people, fine. You can listen to CNBC or Fox Business or somebody like that, and you'll hear all kind of the mainstream stuff. I'm being contrarian myself, just in general. I find that these predictions and reading them. I don't get as much information. I get the interviews from David Hunter. He's pretty guarded about his methodology. He reveals pieces of it, but he's not giving anybody his formula. Peter Schiff, on the other hand, pretty open. He's written a lot of books, and you kind of know where he's coming from and why. But both of them have the same ending, which is not good, which is that we'll see 80%, 90% crash. We'll have to see when that comes. But we have one foot on land, one in the boat, and I'm playing it long both ways, actually, looking out in time. And I'm a firm believer that people need to, just like when I work with organizations and advising them, it's what your beliefs are isn't necessarily what reality is, and you've got to bounce what's happening in the markets off of those beliefs that you have and get them challenged. And these two people definitely will challenge what your thinking is, and I think that that's a good thing. And then beyond that, you need to learn the tools of trading, especially if what Peter Schiff and David Hunter are talking about is we won't see the highs that we see now, whether it's what we're seeing today or what we're going to see if we achieve David Hunter's melt up for decades. So being a trader may have to be a requirement of what you do, or finding someone that can help trade these types of environments. It's been an education. That's what I wanted to cover this week. And remember, there is always a better way.